In our last video together, we discussed why the most important stock in the world might be breaking out, and it certainly has done so. With positive gamma leading the charge, huge technical levels, and possibly earnings upgrades from the street, there's a lot to like about Nvidia right now. But what might be most important in the world could be the crash. Yes, the worst sell-off in one-day history since the global financial crisis in Chinese markets. Does it matter for us as investors and traders, and how much worse could it get? Well, as it turns out, we have more dark pool activity to discuss in today's video, along with the coil ahead of the inflation numbers and meeting minutes in the US. And of course, will October be completely cancelled? Let's talk stocks, commodities, and cryptos together right now. This is going to be a great one. We'll see you in a moment. Well, welcome back everyone to The Daily Show, and what a wild 24 hours that was. Energy and metals absolutely getting crushed as China sees the 17th worst sell-off in 60 years, and of course Nvidia making a big breakout and going completely against that trend. There's a lot to discuss in today's video, but let's begin with the breaking news. The worst trading day on record since global financial crisis for the Hang Seng. To make matters worse, all of this came off, of course, the largest transactions we've ever seen. But wait, we've now got a new one on FXI that we'll share in just a moment. So as we already know, and on this channel we like to bring a mixture of technical analysis levels, we like to bring a mixture of data and seasonality together to make better informed decisions about markets. If it's your first time here, make sure to subscribe if that interests you. But let's take a look here at all these transactions. Huge amounts of profit taking most likely, and additional entries as China brings the bazooka when it comes to the stimmy, and most likely further stimulus, as we'll talk about in a moment, moving forward into 2025. We know that everyone was trading massive leverage in terms of China as well to try to get this main gain, and some people were probably making upwards of 100% over a 2-week period. But some of the largest transactions have gone through, and then there was a new number one. Yes, this 10% fall just led to the largest ever transaction in the last 2 years on FXI. So someone clearly is trying to buy the dip. They like that 10% discount, and they're saying, hey, this is the point. As we often say, it really doesn't mean, though, that it's going to instantly rally up. In fact, a large transaction like this can occur, markets could rally, and they could still drop back. We'll talk about our kind of thought processes as we go through the charts later on for this, but let's just discuss quickly one of the theories that we have right now, which is China really out of the worst yet? Is this actually the thing that brings back the economy and makes the recession go away that China's been in for the last couple of years? Well, we believe it probably is. And of course, we've argued this most of 2024 so far with the idea that short squeezes were going to be the big storyline. And of course, that's what's most likely happened recently. Everyone was heavily short. The market had that big news. And of course, people were forced to sell their positions and cover as quickly as they could. And some of them could not cover. So they lost billions and billions of dollars. We also know the 10-day advanced decline line was so strong that it also led into something that we call basically a thrust. And of course, this is basically now saying, well, when we've seen things like this, they have marked significant bottoms for markets. So what's probably going to happen in China now? Well, we're going to need more stimulus. Whenever we see these types of thrusts, we often move quickly, then we'll see pullbacks, and then we'll require more work from the PBOC. And I think that's where China sits right now. It's going to be a story of kind of like cat and mouse in terms of the PBOC and what the market is asking for. Let's now move over to the US market though, because of course it's earnings season and we've got a lot to discuss in terms of the data. First up, what's going on in terms of credit spreads? Well, it looks like they're tightening, and this is not a bad thing. In fact, they're the tightest level now since 2019. And what that's showing you is that the market is not scared. If you're a bull in the markets right now, especially a 3, 6, even upwards of 9 to 12 month bull, maybe you need to be looking at this and saying, hey, this is pretty good. Because when credit's like this, you don't really want to be that concerned about market pullbacks. Why? Well, it's showing you that the bonds market, which is often considered smarter than the stock market, is actually saying, you know what, things are looking pretty damn good. For the week ahead, we have CPI, the FOMC minutes still to come, and of course CPI is expected to be the most volatile, but don't forget the JP Morgan release and of course Wells Fargo that's coming on Friday. Earnings season's kicking off, and another one to note here would be Tesla and the 10-10 event coming in Thursday. That will move the stock quite a lot. Let's now have a look at the overbought signals right now, because of course we're in what we call a pullback in time or chop. And this is perfectly normal for markets after such a big move, and it could lead into still a little bit more of a sell-off before the rally happens. The good news though for bulls is that Nvidia movement, because of course we know where Nvidia leads, the rest of the market tends to come with it later on. And it could mark a good sign as well for the Magnificent Seven to have another uptick over the next coming month. So bullish percent index has ticked above 80. Again, it's a little bit of a warning sign to say, you know what, just need to do a slowdown here. The McClellan summation is also really high. We've talked about the 50 and the 200 moving average and how far the market's been away. Again, it's good to see consolidation at this point. And just recently in our last video, we talked about how the equity put call ratio, now this is equities, not equities and indices, was hitting 0.48, which often is again a sign of capitulation or some type of consolidation is what I meant to say. So basically a market that is, happy to be where it's at for the time being, reset, then move up. As we know, big news is coming. That can be a catalyst, and this is a classic case as we kind of fight off between two options levels that we'll look at soon, where we could be going significant in the positive gamma, or of course, we could go to a negative gamma style waterfall shed, which could move as much as 5 or even 6% off the market. The market has rallied more when we see Fed going slowly. Now, the jobs number that we had last week, while, looking strong on the surface, obviously was more of the same. Still kind of a weakish, medium, laggy kind of jobs market. And what that means is that the Federal Reserve will probably continue its, of course, cutting cycle. However, the rate at which the market was expecting cuts is probably going to change. 25 basis points seems to be the new expectation, which I think is more in line with the slow cycle cut. And again, that does mark a decent point for markets themselves. And in fact, most analysts seem to be incredibly bullish. Like we're seeing them turn super bullish over the last 3 weeks, with some analysts going as high as 6,000 for the end of the year. In fact, saying it's too low, such as Goldman Sachs here. And Oppenheimer also coming out with a high 5,900 target for the end of the year. So there's a lot of bullishness going on in the markets right now, and a lot of people expecting something like this. A pullback in October, which could be still on the cards, and then a huge rally through to the end of the year. Now that's generally how things work, but of course you've got to keep a flexible mind. If you take a look at FundStrat's data here, it says that based on the information we've got so far this year and similar components, maybe October should be down, and that could still happen. So of course we need to be on the lookout for this. Based on November though, 89% win ratio in similar situations. So again, even if you see a pullback in October, should it be seen as a buying opportunity? Generally, you would have to say the stats don't lie here. 3-month and 6-month forward, no landing style scenarios, also having a 100% track record if we don't go into a recession. So let's have a look at this earnings season. What's the expectations by the street? Well, they keep downgrading it. And Mike Siccardi over here shared some great charts from Bank of America that basically show that we're getting a little bit of expectation change coming in, but still prices staying quite strong. Also, most people are also expecting huge changes in terms of the Magnificent Seven versus the S&P 500 in terms of the other 493 stocks. And it's now expected that earnings may slow in the third quarter, which is again a bit of a downgrade. So what does that mean? Well, all of a sudden we can have beats across the board. Here's actually the EPS forecast from the bottom-up consensus versus Bank of America's consensus for 2024 into 2025. And you'll notice here that in general, they're still much higher in terms of their overall expectation. And even though they're downgrading it, that just allows for the beat story to come through. It's the same old into this earnings season. When we take a look at what's most important, it's going to be JP Morgan and Wells Fargo this Friday. BlackRock could also be worth watching. And of course, we will cover all the implied volatilities and the big moves this earnings season. So make sure to sub for that. It's going to be a good one. And earnings season brings great day trading and swing trading opportunities. So we're looking forward to this. Now, we mentioned Nvidia is one of the best stocks in the world. We know that. We've been bullish on it. And of course, we were doing some great live streams back in August where we saw some amazing prices for this stock, 95, 92 kind of dollarish during the live stream itself. Now we're at a different level though. Of course, we're breaking through the 130 and it comes time for us to kind of figure out what's in store for it by the end of the year. So we did a quick poll over on X and we can see here that you guys are turning ultra bullish very quickly on this to a 160 plus by the end of the year. and most people are thinking to the bull end. In fact, 50% of you are basically going for, or 50+% of you are going for the market to be much more bullish on Nvidia. And I think that's rightfully so when you see the price action, when you see the movements that you will look at on the charts, including the semiconductors, dark pool activity. Let's talk central banks for a moment. Balance sheets obviously on the improve thanks to, of course, the PBOC, China doing that. And that usually leads into a lagging effect for Bitcoin. A lot of people are saying October's cancelled. The one thing is we only just saw the stimmy for China. Generally, Bitcoin will lag that behind. So I wouldn't lose faith in the idea that September was, of course, bullish. And generally, the next 3 months are relatively good. I think if you took October, November, and December and put it together, there's a good chance that Bitcoin will have a bit of a resurgence. It's been a while now. It's kind of been sitting for around 6 months to even longer. Let's talk big dark pools. We're back at the exact same level for the S&P 500, 5750. This is the resistance ahead of the FOMC meeting minutes. And of course, then we have the CPI numbers. So you've got to be careful inside of the small trading range, but we also have some big trades here from semiconductors. Have a look at this. Soxel, the 3-time semiconductor bull fund, just got a massive trade in it. And as we know, whenever these types of things happens, we have to be paying attention. The last time we saw big trades like this, we saw some significant upticks in semiconductors. So big transaction coming through, and of course, Nvidia reacting to that straight away. Semiconductors also showing up on SMH. We're about to make this new high here, and we've seen some pretty nice, what you would have to assume is accumulation down in the lows. And of course, if we break this zone, will that be significant? Yes, it's effectively the leading kind of most important sector in the market saying, you know what, this market is still bullish and we're moving forward on the uptick. And again, what can actually happen is the rest of the market can drop, which we've seen before. The semiconductors can lead, and then of course, everything else starts to pick up behind it. Let's talk the last couple of days though. XLK, semiconductors, the best two over the last 24 hours. Consumer discretionary continues to do well. And solar got bashed, 5.48%, probably due to China falling off and also the election getting tighter and tighter on the polls. When we move over to the last 5 days, semiconductors is now the best, solar is the worst, and as we've suspected for a little while, gold is not doing too well. And that's fine, because of course, even though we're bullish on gold here on the channel, we do know that it's due for this consolidation. We've been saying that now for 2 weeks. Let's move over to the S&P 500 channel, or kind of like literally coiled range. You can see here the trend has still remained bullish. Really, we need to take this 5680, 5670 zone to show that the bears are willing to push it down to 5600 or even 5500. And we can see here the coiling action of the market. This is what we call a pit or a pullback in time. It's perfectly normal. And at the moment, the bulls are in control. And the reason we say that is because when you look at the daily here on the futures market action, we continue to see these strong bullish wicks. And we were mentioning that in our private stream into the open over the last 24 hours. And I kind of said, look, the thing is that this market just keeps wicking off this zone. So the bulls are in control of this current level. Now, we do have overbought signals, but as we know, overbought signals can either lead into pullbacks in time as they reset, or even just lag out and basically continue up, because of course the markets are very strong. But at the moment, we're still trapped. We're going to have to see what the news does. And that's the thing with the S&P 500 is it's all about the news, and it's all about showing where the flow wants to move to. Which equilibrium level do we want to move to yet next? Will it be a 5600, which I suspect still may be hit this month, or will it be a new all-time high and this thing just keeps on rallying? We know it's trapped. We're looking for the breakout. Let's talk options. This is why we know it's trapped as well. Take a look at this 5750. I'm just going to zoom this in for a moment. So the call wall at 5750 is huge for the next day. And of course, if we get through, what's that going to do? It's going to push that positive gamma kind of squeeze kind of concept. Over the last 24 hours, we saw 5700 as a put wall. It was too much for the market to get below. So of course, it led to the market gravitating towards the next key zone. And that's always what it does ahead of news. Now, if it does get through 5700, where do we go to? Well, you'll notice 5800 is now the key level for the 10th. So this is the 10th of October. So if we do break 5750, start to move through 5760, the obvious next zone is going to be around that 5800 on the chart. So it could be quite a nice little day trade move. From the bottom end, 5610 still remains the most struck put wall. So that's, of course, going to be the downside kind of holding level we suspect. NASDAQ CTAs and S&P 500 CTAs are still behind the curve, so they're not quite buying the dip as you would expect. But as we know, they're not always correct. Take a look here at gold. We obviously were rallying gold over the last couple of months, and then all of a sudden CTAs have started to pick it up pretty much only as we start to see the rally. They're super behind the curve, but they continue to purchase inside of this chop, which I think bodes pretty well, frankly, for further upside on gold into the future. When we take a look at Tesla, it's the 10-10 event that matters, 240 on the put wall and 250 on the call wall. We know 250 becomes quite a big strike, especially as we lead into the middle of October. So that will be one to watch there. For Nvidia, it's all about the 130, 131, and we're through it. So can we hold above this zone? We're in positive gamma. You can see here the market convexity is totally switched. Things have looked way better for like the last 2 sessions. And this was the stock that was absolutely bucking the trend of the rest of the market. And, again, something we talked about in a private stream, you just couldn't hate the chart. The chart was showing you flow was coming back into it, and we'll look at that in just a moment. Speaking of charts, let's have a look at what is good and what is bad. Well, firstly, for the bulls, as this is our bond indicator here. It's basically showing you that there is not too many things for concern just yet. This isn't back where we were in August, where we saw the bonds kind of freak out into that event. We're seeing a calm. And of course, when we've got this type of lowering spread here, we know that overall, this is a good sign for markets in terms of the bulls. We also know that high yield junk bonds are still overall increasing. And even with the recent sell, pretty much just due to yields going up, the overall kind of risk appetite for junk is still pretty high. And when people are prepared to buy junk bonds, that's usually a decent medium-term sign. US dollar continues to be bullish. We're looking for that into the 102.80, 103 range with pullbacks to be met by bull demand. Where do the pullbacks go to? Could be role reversal around 101.70. Could even be further down at 101.40. We'll watch both levels. Copper fell off because of China. Obviously fell into the first minimum support. I'd like to see it go further. So I kind of want to see China go a little bit lower. And what I suspect China will do is rally a little bit, then drop later. Have a little bit of a downturn here because there's a lot of hype on that market. And then I'd like to see copper hit into around 432. We'll be looking at both this level and this level, though, as we see more structure. Remember, it's patience, react, don't predict. In this case, we have to see the market structure up. Gold comes back to its daily 20 moving average, which has been where it bought last time. Not really a super level for gold. Couple of different zones coming in there, though, as you can see. Again, no structure yet for this precious metal. So we're waiting. I'd like to see it fall further to 25.60 before getting an uptick. What about silver? First support hit. Again, not enough structure. I looked at the small time frames for you guys, but it fell into this zone. We are bullish, of course, silver over the medium long term, 3 months, 6 months, 12 months. But at this point, it's not showing any good signs. Now, were we correct on oil? Well, as it turns out, yes. This thing got thrashed over the last 24 hours after hitting into our target, going a little bit higher than their target, and now it's moving back down. Nothing wrong with it coming back down. I would like to see it go lower first, probably into this key bull break zone here. In between this and the day trade buyers area would be a nice level to see consolidation for oil. So again, it's kind of pointing into further downside potential here for that commodity. When we move over to Tesla, it's stuck. Why? It's waiting for the 10-10 event. Probably expect it to be stuck between 240 and 250 until that event happens. What about Nvidia? Wow, that's a good break. Downward trend line, beautiful. Multiple amazing turn points that we've discussed on the channel. Not only was that super buy the dip very cool, but on top of that, we've had 1 and 2 extremely good entry zones. And now we're starting to see the flows come back in. Now, I think it's important to note that even though this is a very bullish medium-term sign to show that the markets are going to go probably towards an all-time high, it can still pull back here. So you could see things like this happen. You could even see a possibility of that happening. But I think overall, this is a very, very, very strong sign for Nvidia. And of course, that coupled with the large transactions, if we get a big weekly close, could mean that this market is going on to its next move. This has been a significant pullback in time, a significant kind of correction, and this will be a huge weekly close for Nvidia. So we'll keep watching that. Semiconductors also strengthened. They're still behind, though, the big Nvidia. So in this case, we basically need to move past this resistance. So if we think about it, this is going to be the major area. And if we do get through this area, then that could play catch up. We always know that Nvidia leads, the rest kind of starts to follow afterwards. So it's an important zone and we will be watching it. XLU continues to weaken, as we've said in our last 3 videos. Specifically, check out our second last video for the stats on this. This market is probably in consolidation. So of course, some things are going up, some things are going down. There's always a different opportunity in markets. Let's now move over to, I guess, China, and we'll look at HSI. Apple, of course, stuck in that range as we see. But if you take a look at China, it hit this key resistance. This is where we thought we'd see weakness. We have so far, and we've come down to the 38.2 Fibonacci level. Now, this level is pretty good. And of course, I can see why someone might try to buy it up off this area. The problem is that it's probably going to try to come for the golden ratio ultimately, the 61.8. So do you want to buy here? Well, it depends on your time horizon. As we saw, somebody did because they put in a monster trade on FXI, but we have to assume that's a buy, by the way. But overall, I think something like this makes the most amount of sense. And of course, we'll be looking for it on the channel. We'll keep following China as we have done all year because it's a market that's very interesting to study and look at. Let's now take a look at the US 2K. Again, no major moves here yet. This will be an interesting market. It looks like a flag to me. And of course, if we break 2280, that will be a key in the future. What about the NASDAQ? It's still playing catch up. Again, the NASDAQ is behind the S&P 500, which is an all-time high. The NASDAQ is not. It's held that first support zone. It's breaking or trying to break to the upside. It's still in a coil, just like the S&P, into the major news. So nothing much there. Bitcoin. All right, let's have a look at Bitcoin. So bad daily, as we know, and the 2-hour is trying to push up. In fact, over the last 24 hours, I thought that we would maybe see more bullish action off this area, like here. And at the moment, this is the level where you've got to have those stop losses. So at the moment, I would say I'm looking towards Bitcoin finding strength here, even though there's that significant shooting star. If we do break 64.5, I think it's going to be 68 plus at that point. And yeah, there could be some excellent flows going on in this particular coin leading through the crypto market soon. So we'll watch and see whether this can find bullish strength. Let's now move over to the news for the week. Of course, Wednesday is the FOMC meeting minutes. Then Thursday is the CPI. Then Friday is the PPI. But Friday will really be dominated by JP Morgan and Wells Fargo. The earnings season kickoff, this will matter. As we know, Wall Street is downgrading themselves. So they can say, oh, we beat it. And then, of course, the whole shenanigans happen again. What we would be expecting, though, is Nvidia is going to get some upgrades on the charts probably over the next coming weeks because you don't get a breakout like this and flow without seeing a lot of the street readjusting the numbers. So if you enjoyed today's video, then remember to subscribe, give it a big thumbs up, and of course, follow us over on our other social media platforms. If you're interested in finding out more about how we replicate trades and create edge, then of course, you can also check out some of the courses we have. Thanks so much, guys. We'll see you in the next one. Bye for now.